from the campus of the University of Pennsylvania Wharton School. This is Knowledge at Wharton on Business Radio. Here's your host, Dan Loney.
Hi, everybody, and welcome to Knowledge at Wharton here on Sirius XM 132, Business Radio, powered by the Wharton School. Thanks for spending part of your day with us. It is the 21st of June, end of the work week for many of you. Great having you joining us wherever you're listening around the United States or up into Canada. Coming up on today's show, at the top, another tech company went public yesterday. Slack, the office messaging service, had a strong first day of trading, but it was not a true IPO as we have seen from other tech firms so far this year. It was a private listing, which didn't offer new stock to the public. We'll discuss why this, or I should say direct listing. We'll discuss why this direct listing was used and its impact for the future. Then we take a look, or spending some time on the summer film season. Avengers Endgame leading the pack so far, but there are still many strong films yet to be released. We'll have a preview of some of those films you should consider and whether or not there may be a few Oscar nominees in the summer movie season. Then, in hour number 2, surveillance has increased in America in the wake of 9/11, but it appears that we are going to see even higher levels of security and surveillance than we are currently seeing. Part of that is the push by technology to develop products for government agencies. Author Arthur Holland Michel explains why from his new book, Eyes in the Sky. He'll join us at 11 Eastern Time. And then in our final 30, we take a look at a report from The Economist about the states of California and Texas. They are similar in some ways, but vastly different in others. One thing in common is the impact being felt by the citizens of each state in a variety of areas. And unfortunately, in both cases, it is negative. We'll discuss that report coming up at 11:30 Eastern Time. All of that over the next 2 hours. Your comments and questions are welcome throughout. The way for you to join in is either by phone at 844-WHARTON, 844-942-7866, or if you'd like, send us a comment on Twitter at BizRadio, B-I-Z Radio 132, or you can use my Twitter account, which is at Dan Loney, L-O-N-E-Y 21. First, though, here's what you need to know from today's business headlines. The largest refinery on the East Coast dealt with an explosion earlier today and a fire. The Philadelphia Energy Solutions plant in South Philadelphia, which is a partnership with Sunoco, produces around 330,000 barrels of gas per day. Gasoline prices are up about 3.5% on the news. David Sackler pleads his case in a new Vanity Fair article. His family owns Purdue Pharma, the company seen at the heart of the opioid crisis because they developed OxyContin. He said in the article, quote, "Facts will show that we didn't cause the crisis, but that we want to help," end quote. Car retailer CarMax beat across the board with its latest earnings report. Profit came in at $1.59 a share with revenue surpassing expectations. Comparable store sales were up about 9.5%. United Health is reportedly buying payments processing firm Equian for $3.2 billion, according to the Wall Street Journal. They note that Equian, previously a privately held company, will be merged into United Health's Optum Health Services division. And Delta Airlines has bought a 4.3% stake in Korean Air, a stake they would like to actually increase sometime in the future to 10%. Delta has had a joint venture with Korean Air since 2018. Slack, the workplace messaging service, is the latest tech company to go public this year. It joins firms such as Uber, Lyft, Pinterest, and others. But this move to public status was unique as it was a direct listing and not an IPO. That means that no banks were underwriting the process and no new shares were sold. Slack didn't need to have the direct IPO as it already has $800 million in cash on hand. It gives existing shareholders, though, the chance to gain liquidity by registering their shares for sale. Spotify used a direct listing last year, but it is rare to go this route. Slack hit the public market yesterday, opening at $38.50 a share, jumping to as high as $42 before closing at $38.62. Joining us with more on this, David Brophy, finance professor at the University of Michigan Ross School of Business and director of the Office of the Study of Private Equity Finance. And also with us is Haran Segram, who is clinical assistant professor of finance at NYU's Stern School of Business. Gentlemen, great to have you with us today. Thank you.
Good morning, Dan.
Hi, Haran. Good morning, Dan.
Good morning. Haran, this is obviously unique. From what I read, it's the second time we have seen a direct listing like this.
That's right, Dan. As you mentioned, Spotify went public through direct listing mode. And the direct listing is a luxury. So in the sense, you have to have a brand name and enough cash on the balance sheet for you to go direct listing. Because you don't have to raise capital right now. I think they are sort of burning through about $120 million in cash per year, so $800 million on the balance sheet. It'll take care of them for a few years to go.
David, your thoughts?
Same thoughts as far as the ratio of cash to losses or cash out or whatever. I think it's a slick move to download the amount of Series B that they had, which no doubt had voting control rights, and we never want to sell those except privately, I would think. And now you have Class A shares to sell to whoever wants to buy them. So the liquidity motive seems uppermost here.
So when you're looking at this particular approach, David, the pluses and minuses of this idea of direct listing in general?
Well, it's a cleaner sort of a deal for the buyer. There's no lockup and all of the machinations that you have to go through if you're going through the SEC in the normal IPO fashion. And I think that makes it. It looked to me like the employees are a bit of a target too here to get them something that they can make liquid very quickly. Clearly, Excel and the other VCs that we're in appreciate this. Assuming that they own some of that Series B and you can get liquidity. I would think also that the mutual funds that were in it probably think it's a good move as well. A luxury, I think, is a good term that Haran used.
Haran?
Repeat your question again, Dan.
Well, the pluses and minuses you see from actually doing a direct listing, not specifically with this case with Slack, but just in general.
You save the underwriting fees. Just to give an example, Spotify saved close to $100 million. That is nothing to sneeze at. And also, you avoid the dilution effect because if you go IPO route, you have to create new shares. And also, you have the advantage of not leaving any money on the table. For example, if somebody prices Beyond Meat at $25 and it goes to $150, you could argue that the early investors left a ton of money on the table. That doesn't happen with a direct listing.
Do you think that then, we've seen now two of them in a relatively short period of time. Do you think that we will see more companies consider this, Haran, as an option for them?
Definitely, it's an option, but as I mentioned previously, you need to have a brand recognition and some sort of a cash balance for you to be able to go this route. Every company cannot go direct listing because they wouldn't have the brand recognition. And I like the fact that the price discovery is at the larger level, overall market, rather than within few sophisticated investors. So I feel that is an advantage for direct listing as well.
So, David, then why wouldn't a company like Uber or Lyft take this? I mean, they certainly have the brand recognition, and with the valuations that they had, obviously, I would think that they had a fairly decent amount of cash on hand.
I think that they had some headwinds, maybe in each case. Recall the time and the environment and the like. And so there's a certain amount of protection in going the orthodox route. In this case, preparedness met opportunity, and some people might call it luck that we went from a 26 reference point to 38 right off the bat, closed at more or less the same price. It'd be interesting to see what happens going forward. It reminds me a bit of Netscape that on the day of, they about doubled the price. It's way back then, I know, but it went very, very high. And then by the time the lockup was over, the insiders ended up with about half the money that they would have had if they've sold at the peak.
So it seems like there is some fairly strong confidence, David, about Slack going on to the market. And obviously making this move, but within their kind of circle, this workplace messaging service, I know they have companies that have adopted this already, but it's not like it is a full adoption at this point. So they still have quite a work to do to really build out their marketplace at this point.
I think you're right. They've been giving a lot away. I've used it here in my commercialization class with teams and so on as we work on both coasts, and it's good for that. It's good for focusing on projects within companies, but it's taken some pushing and selling to get it done. But they have very good word of mouth now for the last 4 years or something like that, and everybody else has the same kind of system, but it's one of many systems that they're selling. So I think they've benefited a little bit from the high focus that they have.
Right. I mean, is it better than email, or is it approaching being better than email, in your opinion?
Well, one of the problems I think with email is confidentiality, and what we noticed when we used it here is that you could really focus in. You could have a team working here and interacting with teams on either coast, and you could keep it pretty darn confidential. And when there's IP involved and so on for younger companies, or even for bigger companies with their strategic decisions, that becomes the most critical thing. So,
Haran, have you used it yourself?
I haven't personally used it, Dan.
So what are your thoughts on it as a company and its idea of challenging the structure of what email has been across the United States and across the world over the last couple of decades?
I echo what David said. High confidentiality and security needs very important for these companies, young or old. From what I hear from users, Slack seems to provide that. And also, when a company's name becomes an action word, somebody saying, I'm slacking, there's something going on with the company.
It didn't used to mean that, did it?
No, it didn't.
Like
exactly.
I'm Ubering or I'm slacking, it becomes a verb or an action word. For the first time in human history, slacking seems to have a positive connotation.
Right.
Well, and I asked that in part because I haven't used it personally, and I'm of the older generation where I'm just used to using email. But again, I guess, David, we're in a time where we see so many different types of technology developed to try and enhance systems that have been in play. This is one of those in this particular area of conversation regarding work and as you mentioned, IP.
Well, adjacencies don't always work. It's a great term, and it refers to something that's sort of the next door neighbor of the main thing that you're pushing today. But if somebody comes along and says, look, I understand you've got a lot of small groups working around the world. You'd like to keep them in touch. You'd like to keep this confidentiality that we've both mentioned here. All of a sudden, that can be like driving shooting an arrow in a sense, rather than some more general approach, and can get followership and so on. And if people are satisfied with it, that's where the word of mouth comes from, and the insistence that whatever the next project is, we got to use Slack.
It is interesting, Haran, that with this direct listing, as you mentioned before about not wanting to dilute the existing shareholders in this case, the existing shareholders, whether it be the early employees of the company or the VCs, whoever it might be, they certainly did benefit from this first listing, because the original value, I think, was posted at about $26 by the New York Stock Exchange. It opened at $38.50 and ended up tipping as high as about $42 a share yesterday.
Definitely benefited, especially there's no lockup period with the direct listing, so it gives them a tremendous advantage. But I tend to disagree with the valuation of the company, but that is a different topic.
Well, sorry.
Go ahead, David.
On that point, I mean, think about it. When did it come? When was the $26 price or value, whatever you call it, reserve price set? And what happened over the last few days? We've got a tremendous tailwind over the last few days.
Yeah.
And people have stacks of money. They want to do something with it. Here's a hot company. It fits the bill of all the recent big tech startups, except there's there are no apparent mortal sins that they've committed at this point, and so we've got this tremendous run up. I'm with Haran. I don't know what's going to happen next week with this, if sobriety returns or something like that, or bad news. But if they're stuck at $38, it's not bad.
You're listening to Knowledge at Wharton here on Sirius XM 132 Business Radio, powered by the Wharton School. We're talking about the public listing of Slack, using actually a direct listing yesterday on the markets. Your comments are welcome at 844-WHARTON, 844-942-7866, or if you'd like, send us a comment on Twitter at BizRadio132 or my Twitter account, which is at Dan Loney, Loney 21. David Brophy joining us from the University of Michigan, Haran Segram of NYU. Your comments again at 844-942-7866, or if you'd like, send us a comment on Twitter at BizRadio132 or my Twitter account, which is at Dan Loney 21. It is interesting when you look at the history of the company, David, and going back from what I read, this was originally a gaming company which switched over to messaging software that actually, I guess, it had developed and was using within its own office. So it's another tale of a startup success, maybe going from one direct area to going to another.
Well, this is the greatest thing that's happened to me for my commercialization class, because I've put 200 companies through that program so far, and I love the idea that having stubbed your toe on the first one, you're able to find something within the company on which to build, and look how they've built it. So many people, when they hit that first roadblock in building a company, quit or go get a job or whatever. And introspection of who we are and what we have is a vital component of entrepreneurial success.
Haran?
That's absolutely right. You have a business that doesn't go anywhere, and then from that you get a tremendous business that is priced at $23 billion. It's a fairy tale story.
You mentioned you're concerned about the valuation of the company. Why so specifically, Haran?
I did every type of every angle valuation. I was a Hollywood scriptwriter. I jumped through hoops, but I cannot see the value that is trading at right now. $23 billion is ridiculously overvalued. It's a momentum play. It is more of a pricing game than a valuation at this moment.
So then, if you're thinking about investing in it, should people be concerned, be worried about the valuation of whether there's a pullback on that?
Yes.
Yes, absolutely.
Retail investors. Sorry,
the name's Tucker, not soccer.
David, you agree with that?
I think I do, yeah.
Because? What do you see?
To my earlier point, I mean, this is the best day of the year for this thing to have happened, because the market hit a new high. Everybody is wiping their brow, wiping away the sweat and fear and so on, and all of a sudden everybody's in a good mood, and I think they're attracted to something that was supposed to attract us anyway, which is high-tech, big companies heading toward multi-billion-dollar valuation. Mm-hmm. So we'll see. If that is sustained, that'll be, I think, amazing. And of course, Haran and I are both probably going to be wrong, but anyway, that's the way I see it.
So if this had been a traditional IPO, what do you think would have played out yesterday then, David? Would it have been similar, or would it have been a negative, kind of like we saw with Lyft?
I think there'd be two components to it. One is what Haran has suggested, all of those virtuous characteristics that we both sort of mentioned, and also the lift that we had, no pun intended there, the lift from the ebullient market. And I think that the IPO, the normal IPO, would have gotten the lift from the ebullient market, but whatever the amount is of value in there, they would not obviously have had the other. So. This also speaks to a couple of important things that we often don't hear about. One, the strong balance sheet, the big ton of cash that they have, and number two, the small sort of net cash outflow that they're experiencing. So it's not common to run into a high tech company that's got whatever it was, a 7-to-1 ratio of cash to negative cash flow.
Haran, your thoughts?
Thoughts on what, Dan?
On the success that they have had here in 24 hours, and would it have been different if it had been a traditional IPO?
I don't think so. Traditional IPO value is the value, or the price is the price. It would have worked out very similar to this, I believe.
844-942-7866, or if you'd like, send us a comment on Twitter at BizRadio132 or my Twitter account at DanLoney21. David Brophy of the University of Michigan joining us. Haran Segram of NYU. Again, 844-942-7866, or if you'd like, send us a comment on Twitter at BizRadio132 or my Twitter account, which is at DanLoney21. One of the things I wanted to touch on, David, that probably a lot of people listening to us don't follow and may not understand is the process of actually making that call to go ahead and do the listing, whether it be the direct listing or whether it be the IPO, of the timing of it and the success that the company has. And in this case, as you just mentioned, with the strong balance sheet and the $800 million in cash that Slack had, the timing of this, I would imagine, well, obviously the day that it went on, but the timing of going through the process and doing this had to play a role as well.
I think so. I doubt very much that they could have forecast the good market of Thursday and whatever. But I think that if you look at their capital structure, they had about a 3-to-1 ratio of Series B to Series A, which means, and they claim that 99% of the control is in Series B, and those Series B holders wanted liquidity, and they're not an obvious IPO at the moment. In other words, they don't need the money, which is usually reason one for going public, put it that way. But to accommodate and to sort of rebalance, in a sense, the capital structure, I think that was something that they decided to do. And it's the season of high-tech IPOs, right? And they were nth in line or whatever, and I think that's what caused it. So I would think that it was a fairly calm sort of approach to all of this, and they happened to land on a very happy day. So
it does highlight, Haran, the fact that not all of these high-tech IPOs, as David mentioned, are the same. And obviously we'll have different levels of success when they're coming out of the gate. As you both have mentioned, the next week or two may very well be different, but that first 24 to 48 hours could vary depending on the company, on the structure, on the type of product, on the balance sheet, on a variety of different factors.
That's absolutely right. And also markets heading towards the peak does help, because it's a common phenomenon when IPOs tend to flood the markets when the markets are headed upwards rather than it's declining. So market timing did really helped. The famous example I can remember of is Visa going public in 2008. If somebody has picked a market timing, nobody could have done better than Visa at that time.
David, your thoughts?
The one thing that overhangs that I don't understand yet is the $26 reserve price. Maybe Haran has some knowledge on that. I don't know.
Haran?
The reference price of 26 is substantially higher than what I estimated for this company, and for that to increase by further 50%, I cannot get my head around it.
We're on the same page. That's exactly what I was thinking, because that's a big gap, a big jump.
So, Haran, then what's the best advice you think that investors or potential investors should be thinking about when they are at least considering Slack as a potential purchase?
I think retail investors should stay out of it. Usually the retail investors are left holding the bag, and it is a tremendous momentum play. It's a great company, there's no doubt. But I have a feeling an acquisition premium is being factored into this rather than the intrinsic value for this company, because there are deep-pocketed competition, Microsoft, Facebook, Cisco, and Google, to name a few. Yeah. So maybe investors are thinking this is such a great business, one of these large companies might just acquire for $30 billion or $40 billion, so why not run the prices up? But that is not the way I think about investing, so I will stay out of it.
David?
No, I would agree, particularly for the retail investor. And I don't, it's going to go in. I know, Haran, if you agree with me or not, but it's going to go into mutual funds. That'll be the key. Are they buying it, and are they adding it to their portfolio?
Haran?
I agree with David here, but whoever the big money and the sophisticated money is already in Slack in the private markets. So I don't know who's buying it.
No, that's what I'm saying. That the big money, as you call it, is probably in the Series B.
Right.
I don't know if they have preferred out or not. And I think part of the motivation here was to permit or enable or facilitate, take your pick, a liquidation, not a liquidation, but a liquidity event for those Bs to convert into A and then be able to sell them in a market. And then there's your question, who's going to buy?
I completely agree with that.
It didn't run away from first price to last price. That's the thing that's amazing here, because we usually measure the performance of IPOs by looking at their first sale and looking at their last sale and the difference. And that's always oscillated between 10 and 15% on average. And there was no such movement in this one.
No, it ended up almost being flat at the end of trading yesterday.
Yeah,
gentlemen, thanks very much for your insight. Greatly appreciate it. David, Haran, thank you. Have a great day.
Thank you, Dan. Thank you, David. Take care.
Bye, Haran.
Thank you. David Brophy, finance professor at the University of Michigan at the Ross School of Business. He's also director of the Office of the Study of Private Equity Finance. Haran Segram, clinical assistant professor of finance at NYU at the Stern School of Business. We will take a break. When we come back, today being the first day of summer, we are officially moving into the summer movie season. We already have had a couple of blockbusters out there kind of working their way into the summer movie season, Avengers Endgame being one. We'll take a look at some of the films that are going to be released in the next few weeks. What are the ones that maybe you should put on your radar to go see? And maybe are there a couple of films out there that might earn themselves a couple of Academy Awards? We'll talk about that next. Sirius XM 132 Business Radio, powered by the Wharton School.